What's going on, guys? Welcome back to my channel. Typically we're talking about business, finance, real estate, how to make money, how to save money, and how to invest your money. So today we're going to be talking about a method of real estate investing that you've probably heard before, especially if you've been looking into getting into real estate investing in 2021 and beyond. You probably heard a lot of different real estate investors talk about the particular method that we're about to talk about. And that is obviously the BRRRR method, okay? And no, it is not cold in here, so not that kind of BRRRR, okay? We're talking about a different kind of BRRRR, and we'll jump into that here in just a second. So as you probably know, there's a ton of different ways to get into the world of real estate investing, and I myself am actually a real estate investor. I've been a real estate investor for about 7 years now, give or take, and I'm actually a real estate agent as well. So what we do is we actually wholesale properties, we flip properties, we buy rental properties, Airbnb properties, and I'm also a real estate agent. The BRRRR method to me has always been a fascinating concept because even before I got into the real estate world, I would always hear people talk about it, and it didn't make a lot of sense to me before I really started to look into it and before I really started to immerse myself in the real estate world. So if you're somebody watching the video that maybe has no real estate experience at all, or maybe you're somebody watching the video that eventually wants to get into real estate, or maybe you've wholesaled a couple properties or you're a real estate agent, but you have kind of this weird feeling that in the future you want to get into the world of real estate investing, you want to build your wealth through real estate investing, then you're going to definitely want to make sure to stay to the end of the video. Because there's a lot of other industries out there, especially in a world like 2021 where everybody's on social media, everybody's on Instagram, everybody's on TikTok, everybody's on YouTube, and everybody at this point is pretty much a guru. But I know for a fact that real estate investing is the most time-tested, proven industry on the face of the planet, okay? Don't take my word for it. Take a bunch of other people's word for it. You know, you read books like Rich Dad, Poor Dad by Robert Kiyosaki, and there's so many other people that talk about real estate, right? You got guys like Grant Cardone, you know, where he's talking about real estate, okay? And there's a lot of people out there that'll literally preach your ear off that real estate investing is probably the best investment strategy, the best vehicle, right? The best industry, the best sector of the market to get into if you want to build a lot of wealth in the long run. So let's just go ahead and dive right into the BRRRR method, okay? What does BRRRR actually stand for? So the B stands for buy, okay? You probably could have guessed that. You actually have to buy a property. So you can't really get into the world of real estate investing on any level if you don't end up buying a property. Now, there is one way to do it, but I talk about that method a lot in other YouTube videos on my channel, and that is called wholesaling real estate. But we're not going to talk about that right now, and we're just going to be talking about the BRRRR method, and first you have to buy. Now, the key in the buy with real estate, and the key to the BRRRR method is going to lie in the buy, okay? If you buy the property at the wrong price, then the BRRRR method ultimately won't work for you. So what do I mean by that, okay? Here's what I mean. You take a property, right? And you've got to buy it below market value, and you have to renovate it, which we're going to talk about in just a minute. And you've got to be all in at a certain number in order for the BRRRR method to really work the way that everybody intends on it working. So you may have heard before that in order to go and get a conventional loan on a piece of real estate, an investment property, you need about 20% down, okay? But the BRRRR method is going to allow you to get into the world of real estate investing on your first property and then your second, your third, your fourth, your fifth, without actually having to come out of pocket necessarily for that full 20% down, okay? So what we're gonna focus on here is we're gonna focus on the fact that most banks, especially harder private money lenders, they want a loan at 75 cents on the dollar, okay? So they want about 25% equity in the deal comparatively to ARV, which is your after repaired value, in order to give you that loan, right? And then conventional lenders want about 20% down. So what we're really gonna focus on here is we're gonna focus on when going and buying a property. What you wanna do is you wanna try to buy the property where your renovation costs on the property and your purchase price on the property don't exceed 75% of the total property value when it is all said and done, fixed up, and completed. Now that is obviously really, really crucial, and I would even encourage you to figure out a way to get it at about 70 cents on the dollar, because you are going to have a little bit of refinancing costs, and you're going to have some other costs associated as well, such as holding costs and things of that nature. And obviously in the world of real estate investing, you're never going to have everything go 100% according to plan. So for those of you watching the video that like to watch HGTV, you like to watch Tariq El Moussa, you like like to watch Chip and Joanna Gaines, okay, I promise you, it is not that simple, and there's always something that is gonna go wrong. So you wanna figure out your ARV when going and buying a property. Now again, your ARV stands for after repaired value, meaning that is the value of which that property will be when it is all fixed up and put on the market, okay? And then what you wanna do is you wanna determine the renovation costs of that property to get it to that value, and you wanna have the renovation costs and the purchase price of the property equal, in my opinion, no more than about 70% of the total ARV. So obviously you're gonna have to do a little bit of marketing. Obviously you're gonna have to look for properties. Obviously you're gonna have to scroll through Zillow, right? Scroll through Redfin, scroll through Trulia, scroll through Realtor.com. You know, there's so many places that you can go to find properties below market value. And that is honestly the biggest thing. And I wanted to spend the most amount of time talking about the buy, because there's a lot of investors out there that'll say you make money in the buy. And they're 100% right? Because if you don't buy the property right, then you're not gonna be able to complete the BRRRR method. And ultimately, if you're not able to complete the BRRRR method, then you're not gonna be able to do this over and over again, and it'll take you a lot longer to build wealth, and it'll be a lot more difficult. So make sure you're buying the property enough below market value to where you're not overpaying for the actual property. So the second R obviously stands for renovation, okay? So you've gotta go ahead and you've gotta renovate the property now to go ahead and raise the overall property value in order for the BRRRR method to actually end up working, which you'll understand here just in a little while. So if you haven't already, just do me a massive favor and just smash that like button for the YouTube algorithm. So there's a couple of things you need to ask yourself. You need to look at the property and you need to say, what renovations do I need to do to obviously make the property livable? Okay, of course, if it isn't livable right now, but also to add value to the property. And now you want to keep a few things in mind. You don't want to ever over renovate a property, right? But you also don't want to under renovate a property. So there's a very fine line that you have to walk in the world of real estate investing, and we're flipping properties all the time. And I always have to ask myself, okay, you know, as much as I want to just go dump a bunch of money into this thing, you know, what does the property actually call for, right? What does the neighborhood call for? You know, if all the other people on my same street or in my same neighborhood that are renovating properties, they're doing marble countertops and they're doing gold accents and like matte black, you know, everything. And you know that's a trend right now if you're watching the video, right? But I go in and I do like, you know, Formica countertops, and I do like laminate flooring, and everybody else has got like that nice big like wood plank tile, then ultimately I'm under renovating it, right? But the opposite is also true in neighborhoods where, you know, maybe everybody else is doing, you know, black appliances and Formica countertops, and they're doing, you know, like cheaper carpet, but like it's still nice, it's still livable. But I go in and I just like deck the crap out of my property. I'm probably not gonna get that much additional value from doing that, okay? So you wanna be very careful, because again, your renovations and your purchase price plus any holding costs or refinancing costs, which we'll talk about in a minute, shouldn't be more than probably 70 or 75% of the ARV, which is the after repaired value. Now, a couple of my big tips and tricks here with renovating properties is to focus on the things that bring the most value, okay? If you watch HGTV and stuff like that, then you probably already know, right? You probably know that the thing that people want is they want the kitchen and they want the bathrooms, okay? Those are the two or three or however many bathrooms there are, okay? The most important things when renovating a property, right? Now, there's other things that obviously matter too, but those are the biggest things. If you can typically update the kitchen and make the kitchen really nice, and you can make the bathrooms really nice, then typically you'll get the most value out of doing that. So you definitely want to focus on that, okay? Now, obviously, you want to make sure the main things are taken care of. You want to make sure that the roof's in good condition, the foundation's in good condition, obviously all new paint, carpet, flooring, fixtures, stuff like that, okay? Make sure it all looks good, it works properly, and it's all up to date. And then obviously the last thing that I would probably mention, and I've talked about it a couple times on my channel now, is landscaping. And landscaping is really big in the front yard, backyard too, but more so the front yard, just due to the fact that you want good curb appeal, right? When you pull up to the property, you want the property to really look good, and ultimately that is going to attract a higher paying tenant, which we're going to talk about in a little while, right? Because otherwise, if you go and put a sign up for rent in the front yard and people are driving by it and it just totally looks like crap, but the inside of the property is beautiful, well, it's kind of like YouTube, right? I can make the best video in the world, but if my thumbnail and my title aren't any good, you're never gonna click on the video, okay? Which is why a lot of people got, you know, there was a bunch of argument on YouTube a long time ago about like clickbaity thumbnails and titles. So So the same thing applies in real estate. Hopefully you got that analogy, okay? I know I'm like not that funny of a person. I have like a really dry sense of humor, so I apologize, okay? You can just smash that like button if you haven't already. The next step in the BRRRR method is to go ahead and rent out the property, okay? Now, obviously this is the second R in the BRRRR method, and make sure you watch to the end of the video because I'm gonna kind of wrap all this up and then explain to you how you can build long-term wealth by utilizing the BRRRR method and literally just doing it over and over and over and over again. So the reason that you wanna rent it before you go to refinance it is because banks very rarely like to refinance properties that aren't rented or aren't occupied, okay? So having it rented and being able to go to the bank and say, hey, you know, I have a rented property, I'm getting, you know, $1,000 a month or $2,000 a month in rental income, they'll typically be way more likely to go ahead and refinance the property for you. The biggest thing to remember when renting the property, and this kind of goes back to the B, the first thing that we talked about, which is obviously the buy, you really want to look at the property and make sure that the rental rates in that neighborhood are going to be higher than your mortgage when you refinance the property, which we're obviously going to talk about here in just a minute. But you want to make sure that you rent it to a really good quality tenant, and you want to make sure that you rent it for top dollar, which is why renovating it is so important, because if you don't renovate it properly, then you're not going to be able to rent it out for top dollar, and then it isn't going to appraise, and you're not going to be able to refinance it. So the BRRRR method, again, you know, you've really got to be careful when doing the BRRRR method. And the BRRRR method is, I think it's a great investment strategy, right? I wanted to break it down for you, but if you don't do one of the things correctly, then it can affect your ability to complete the kind of the entire BRRRR, if you want to, I guess, say that, okay? It's kind of a weird concept to say out loud, but you got to make sure you buy it right. You've got to make sure you renovate it the right way. You've got to make sure that the rental rates are good in the neighborhood. You got to make sure that you renovate it the right way so you can get top dollar when you rent it, right? And you've got to make sure that all of that adds up perfectly so that when you go to refinance it, which is your next step, okay? That is the next R in the equation, that ultimately you have everything dialed in so the bank will give you the loan so that your overall mortgage payment on your refinanced loan is lower than your total rent coming in, and that you have equity in the property based off of you purchasing it and you getting all of your numbers correct, so that way you can leverage that equity to go ahead and to basically leverage with the bank when you're going to apply, right? And that's part of your down payment, and then it'll ultimately allow you to go ahead and you can either cash out, right? You can actually pull your cash back out of the loan when you refinance out of your hard money loan or your private money loan, and ultimately have cash in your pocket to go ahead and do the last R, which is to repeat the BRRRR. So remember, when you go to do the refinance, because when you initially bought the property, and we didn't talk a lot about it, I guess, but when you initially bought the property, you probably bought it with hard money or private money, right? Which means that for a short period of time while you were renovating the property, that property, you were paying a high interest loan with the understanding that you were gonna refinance it here in a couple of short months. So when you do go to refinance it, you wanna make sure that the bank is refinancing it based on the new appraised value. So again, the ARV that we talked a lot about throughout the video. So one of the biggest keys here again is to go ahead and you want to refinance it at the very highest possible appraised value, right? Because if you don't, then it can kind of mess up the numbers a little bit, which is again why the renovation is so crucial and why you buying the property at the right price is so crucial, right? Because if you renovate it the right way, then you should be able to get top appraisal numbers on that property, right? And if you don't, the appraiser might come in and say, hey, it isn't worth what you thought it would be worth, right? It isn't actually worth what you thought the ARV was going to be, right? So you want to be very careful when doing that, and you want to make sure that you get the appraised value as high as you possibly can, and that will allow you, again, if you are going to end up pulling cash back out and doing a cash out refinance based on the appraised value, then that'll make it a lot easier on you, okay? And that'll make it a lot easier to go buy another property. And even if you aren't pulling cash back out, right? I know a lot of people that they're not, you know, because there's a couple ways to kind of do the BRRRR when you get to this kind of point in the BRRRR. You know, some people, they want to pull all their cash back out, right? And there's a little bit of an argument there of like, you don't want to be over leveraged, right? You don't want to own 10 properties where, you know, the mortgage is, you know, roughly what the property ends up being worth, right? So there is a little bit of an argument there, but again, you just want to make sure that you know what method you're kind of going to do when you get to that point, right? But traditionally with the BRRRR method, people do pull cash back out, right? Because they've got a bunch of equity, right? And so you're able to kind of do that and still, in theory, have a little bit of equity left over in the property, so you're not totally completely over leveraged. But then you're able to take that cash and you're able to repeat the BRRRR, right? You're able to go ahead and take that cash and do another property and another property and another property, right? And then ultimately now you have tenants that are paying down your mortgage, and over the long haul, you get to actually build a lot of wealth. So I think the BRRRR method is overall a phenomenal real estate investing strategy, especially in 2021, just due to the fact that interest rates are really low and you can essentially get free money, right? I mean, at the end of the day, inflation on average is higher than the current interest rates, okay? So assuming you have good credit and assuming you're able to accomplish the BRRRR, you know, it is a phenomenal way to build wealth, right? Even if you only did this on 3 or 4 or 5 properties, and then, you know, over the next 10 years, the properties appreciated in value, the tenants paid down your mortgage for you, and overall, maybe you even cash flowed a little bit of money on top of whatever the rental rate is in that neighborhood on that particular property versus what your total PITI is, which is your principal, your interest, your taxes, and your insurance on the loan that you refinanced, okay? So you might even have a little bit of cash flow as well. And then obviously, as you may or may not know, with real estate, you get all of the tax benefits of also now owning real estate, okay? So again, I think the BRRRR is a phenomenal real estate investing strategy, right? The BRRRR is great. I think wholesaling real estate is incredible. You could wholesale a couple of deals to gain the equity to where you can afford to do your first BRRRR. And I think that is also obviously great as well, right? You can even flip a couple properties and take that profit and start holding on to properties every now and then. So there's a lot of ways to kind of get into the real estate industry. You could even go become a real estate agent and help some other people buy and sell real estate to make a little bit of commission to be able to afford to do the BRRRR method. So again, don't limit yourself when it comes to real estate investing. I do believe that anybody that isn't investing in real estate as a part of their overall investment portfolio is doing it wrong, right? I see a lot of people, they own Bitcoin and they own stocks and they own Forex and they own all of this other stuff and they don't own any real estate. And I think that ultimately is, in my opinion, a mistake, okay? I would love to know what you think about that. Definitely drop in the comments section below. I'm genuinely curious as to what your investment strategy is in 2021 and whether or not you'll be doing the BRRRR method, okay? So I really hope you enjoyed the video. Thank you so much for watching, and I'll look forward to seeing you in the next one.